Is July 16th, 2022. The weekend, so we start with our disclaimer. Look at the long-term picture, go over our calls, and make some predictions for Monday. It's my trading plan for Monday, July the 18th, 2022. Please remember, I can be wrong. I can change my plan. Any trade you make should be at your own risk. For Friday, I was looking for the pattern with the early low, which is this. And Monday, I'm also looking for a pattern with an early low. We had a target of 37.45.79 plus an optional target under that. I said futures were higher, and if that gain were maintained at the open, we could see 38 or higher in spite of the target. That's what happened. This is a reminder of what we said. So the patterns I'm looking to see next week. When these things don't print in their preferred time frame, the optional targets crossed off the table. 37.45.79 is added to the list. These numbers print at some point. We can't say when. We get to cross a number off the list, 38.27.82, that printed. Ultimately, we felt it would. You had this big rally while we're going up. MEJT says this move won't stick, it's false, retraced. Said this drop is false, won't stick, and that retraced. I don't look at this as a bullish pattern at all. Rallying all day, 5 minutes left. You're under all these prior highs. 5 minutes left to trade. You get a wall into the close to a new high. This is not the time institutions wait to make their move. When they've gone home and the retail customers want to go long, the only ones left to sell are the specialists. And usually they make certain they get their money returned, and usually a lot more when the market reopens. So this pattern is quite vulnerable to gapping down. Now all that can change at the open. We can keep going up. No one's always right. But you're going to know that before the open. Right now this is quite vulnerable to gapping down at the open, because I think that's a poorly timed move, which is not indicative of institutional support. My long-term targets are around 32.29 and change, give or take a little. Balance of the waves at that point, plus a fib retrace of the rally. Number can change, but I'm sticking with it for now, 32.29-ish. Here's the reason for the number. We're in, I believe, magenta C down. We've completed black A. At some point, this consolidation is going to end in a black B. At that point, I look for a black C of magenta C down, the bear market to end, and the bull market resume. Question is, could this be the end of black B, or at least A of black B? Let's start from around June 8th with this black A. Here's black A. It's 5 waves down, and it's a pretty clear count. 1, 2, 3, 4, 5. Since then, we have an ABC for an A of some degree. We have an ABC with C equal to A for a B of some degree. And we now have a rally where there's a fib relationship between A bracket, set at 100, and C set at 61.8%. So the waves balance out right at Friday's high. Now it could be some other fib number 2. But to me, this is a 5-wave structure. And if it's a 5-wave structure in a counter trend move, it has to be an A of some sort of, or a C. Can't be a B. Those are 3-wave structures. I don't see a good way to count this as an A, so I'm counting it as a C. And if it is a C, when it's over, we start dropping again. Let's take the count from gold B. Here's gold B. I can count 5 waves down, 1, 2, 3, 4, 5. And the fibs work. I can now count 5 waves up. Doesn't mean it's the only count, but there's 1, there's 2, there's an impulse for 3, 1, 2, 3, 4, 5. There's 4, and now you have what I'm calling an ending diagonal triangle. A, B, C, D, E. That's 5 waves, and ending diagonal triangles are terminal patterns. Once this wave E ends, we start down. The minimum target's to retrace all of the triangle, which is down here. But if this is the end of wave 5 up, which would be here, should drop a lot more than that. Of course, if we go higher, the whole idea is killed. But if we start from here, this should be a long way down. And 37, 45, 79 is just one of the targets. It's the only MEJT target, but there are some other targets too. Well, Monday's pattern has the early low. Doesn't mean you won't gap up. Typically, it's a rally day with a high in the final hour, but if it's weak instead, usually it's followed by additional weakness, even if you rally the rest of the day. Day-long Friday rallies, they really should continue into Monday's open, and if they don't, it's quite negative. Accordingly, gapping down Monday, should it occur, hasn't happened yet, would be expected to be followed by some more weakness. The hours-long consolidation Friday was followed by a wall to a new high day at the close. Timing of the break higher makes it suspicious, because institutions wouldn't wait till the last 5 minutes of trading of the day, let alone the week, to make their move. We have the waves are all balanced out. The Friday's close, so it's one of the places at which this rally could end and a sharp move lower begin. Now, so if, that's an if, we gap down smartly, I'd expect that to happen. If that doesn't happen, we should see a high fairly soon in terms of time, not necessarily price, because the volatility index has dropped significantly, indicating bullish sentiment has returned to option traders, and these guys are usually wrong. So this is very suspicious action to me. I can count 5 waves up in a counter trend move. I'm calling it a wave C. And if that counts right, we're going to start down pretty much right from Monday's open. If you go up a little bit first and then reverse, I don't think it changes that much, but you go much higher, there's some other count that's we're going to have to come up with. So Monday's pattern has the early low. Look out below if we gap down. And that's today's call.